All right, it is Sunday evening, and we're heating up here with mobile mailbox money, Win Mobile Homes, and Silvercrest Opportunity Fund. We actually have some notes that are immediately available. Super excited about these opportunities. Why? Well, we acquired about 11 doors of 2023 manufactured homes in the West Valley for a negotiated discount. Ended up having them listed at $50,000. They offered them to us at $30,000. We created an offer at $20,000. We came to an agreement at $23,500 with 6 months of rental concessions. Why does that matter? Well, I'm currently seeking capital and funding partners to make an acquisition of these construction loans so we can do the transaction and offer a first right of refusal to the lender that ends up acquiring this construction loan on these properties, and they'll get a first right of refusal of a seller finance note that will come available double underwritten at a double-digit interest rate. So those homes, 11 doors, we picked them up for like $258,000. Sorry, my dog's stepping on this stuff here. But they're $40,000 positions paying $333.33 a month for a monthly annualized residual double-digit interest-bearing income with the first lien collateral. And I'll actually bring these homes up here real quick, see if I can't do this correctly. We'll go to our winmobilehomes.com website. We'll see if they're up right now. They're in Longhaven Estates. Just type in Longhaven on Win Mobile Homes. And here's actually one of the properties as seen before you. They're brand new inventory. You know, historically, as a licensed dealer, we're buying buying used, not new inventory. But this happens to be in an established 55 and older community by the name of Longhaven. The owner bought these properties, probably put, I can't guess what he buried into these properties. At the end of the day, I think he probably paid close to $50,000 a door, and then had another $10,000-$20,000 in awnings, AC units, setup, transport. So he probably had to eat $50,000 a door just to do this transaction. What does that mean? That means we got a phenomenal deal. These homes at a reduced price point. We bought them about half off, more than half off, with some rental concessions. And why did the individual entertain a deal like that? Are these not quality homes in a quality area? Well, that's not the case. They're actually just not salespeople at the end of the day in niche market manufactured housing, where we've built up our platform to be the largest dealer of mobile homes in Arizona. So we acquired these doors, 11 doors for $258,000, and I need $40,000 a door to leverage and acquire these homes where you'll get a first right of refusal. So start stacking cash flowing assets right at $40,000 a piece. Tough to put that in comparison to other adjacent real estate investment strategy. You're going to have to spend upwards of $100,000 to get a rental. You're going to have to go out and do major due diligence in order to find a satisfactory real estate note, make your negotiation to get your desired return. That comes with a lot of challenges at the end of the day. I've made a previous video talking about the 5 due diligence check boxes for private lenders. Well, here's your possible opportunity from you viewing recently. With those check boxes, you'll find out that this home's a quality home. They're 2023, all the same model in an established, institutionally owned 55 and older gated community in the West Valley. Not only that, but deeply discounted. So our original price point that they were marketed at will be our target exit for that property, and we'll scatter them depending on lot location in the community from $49,900 to like $69,000. So as we develop that strategy in that community and exit via seller carry finance at our desired price point, hopefully all 11 of them will earn us $500 or more a month in monthly cash flow. That's 11 doors times $500 a month. Do the math. That's called financial freedom, people. You could acquire every one of these if you like at mobilemailboxmoney.com. But what are the due diligence check boxes to look into an item like this? These 2023 doors. Who's the home titled in? That's a good one. What are the taxes? Taxes on a home like this are probably $200 a year. on these Longhaven properties. You'll get your secured lien position. So we'll record that at the Department of Transportation because it's technically a car title. We'll validate pricing, right? And you'll get your lien. This being more of a private lending component, you'll be under 75% loan to value with your lending on this property. So there's your loan to value. You've got a quality asset here, a qualified operator, licensed, bonded, and insured manufactured home dealer here in Arizona, license 8670. What were the other questions? $950 lot rent. What's average rent in the area? That's a great one to go over. Let's go to apartments.com. See if I can't do this quickly. This is like the Glendale market. I'm just doing this live here. Whoops. So 1 bedrooms are going for like $1,000 a month. You see an apartment at $1,200 here. That's pretty low. But most other 2 bedrooms are upwards of $1,500. This one's $1,300. So we'll look to match or beat market rent with our exit. And it being a new home, that's extremely important, to add into your factors and understand the quality collateral of this property and all 11 of these doors. They're hooked up to city water, city sewer, city trash. There's no transportation set up, complications with operation. Really, we just bought them and now we're going to sell them, seller finance. And as we seller finance these homes, hits in another additional due diligence checkbox. So what does that look like? Well, this buyer will go through stringent criteria in order to facilitate the ability to repay. They go through a credit check, 600 plus credit score. In this case, they may have ability for a little bit lower at 550. We'll take their overall financial well-being and criteria and put that under a microscope in order to mitigate the risk on the seller finance loan. So first they go through the park. They have a minimum credit criteria of 550 or ITIN number, no past criminal, no open bankruptcies, no past evictions, and verifiable income. And then once they hit that benchmark for the community, they'll go through another necessary round of underwriting to facilitate ability to repay, mimicking FHA debt to income ratios in order to validate and add additional value to the grade of this asset, right? What does that mean? That means you're buying a debt, collateralized lending opportunity, buying debt from a performing borrower. Once this ends up maturing, this construction loan for $40,000, say we sold it for $49,900. You had a $40,000 construction loan. That buyer put $5,000 down as a 10% down payment. They'll have some prepaid insurance and taxes at closing. So they're required to have an insurance policy. That's another due diligence item in order to make sure that that gets set up correctly. But say 44.9 is the seller finance note that will be originated inadvertently through your funding today at $40,000. You'd have to come at maturity. Once we sell this home, right? We bought them. We've now sold them. The unpaid balance is $44,900. You'll have to come out of pocket like, $4,900, $4,999 to meet the unpaid balance. And now you've made an acquisition inadvertently through a construction loan, first right of refusal to seller finance note with the qualified borrower. Following me here? And that note, if you just run that on a mortgage calculator, that will inadvertently come available. If you don't have a mortgage calculator, I recommend Carl's Mortgage Calculator, easy, free, online. So your unpaid balance is $44,900, and all of our interest rates are double-digit yields out in the market. In order to be competitive, also to facilitate, affordability for the borrowers of utmost importance. But long story short, $44,999 is the unpaid balance. That's a 20-year term. That note, $559 a month. No banks, no complications with long-term real estate investment strategy, toilets, tenants, termites, insurance, taxes. You just start being the bank, with this collateralized lending opportunity that you entered into via construction loan. Right? And that's provided to you today by mobilemailboxmoney.com. That's where we post our notes for sale. If you're a note investor and you've been in the industry, you know, PaperStack is a mortgage debt brokerage. You know, they broker debt. I met up with Brett Berkey at Paper Trail. You should check that interview out on the Mobile Mailbox Money vlog as seen on YouTube and Facebook. But this is where we post our notes for sale at mobilemailboxmoney.com. Manufactured home loans that we originate via Win Mobile Homes with a licensed mortgage officer, secondary underwriting, and you know, all the bells and whistles in order to operate compliant. We got some cool videos on there as well. If you don't find yourself a note investor, but you find yourself blessed to be accredited, which means $1 million in net worth excluding your personal residence, or $200,000 a year in income singular, $300,000 a year in combined spouse and husband, you know, you could invest in the fund, accredited 506C, and earn a 10% net return for a 1-year term paid monthly, 12% net for a 3-year term paid quarterly, or our newly originated 14% return paid monthly for a 5-year lockup. And those are liquid, you know, ease in liquidity upon the expiration of your contract. Why is that? Because these assets that we're going after are homes just like this. In most cases, and we have a new strategy rolling out that we're putting boots on the ground and implementing new bells and whistles in order to facilitate via private lending on second liens at 65% loan to value or less with the new debt on single family residence and investor friendly markets. But these happen to be a separate tranche with the offerings as seen previously. But, you know, more affordable assets. We're hedged across $50,000 to $150,000 assets. This doesn't need an institutional exit. I don't need to worry about interest rates. You know, much trouble comes from trying to predict the market. I don't predict the market. I make the market. I make it with my terms and my contract, and I don't have to worry about fluctuations and all the above, you know, and that's why we've seen major success with Mobile Mailbox Money. And now have the fund. So we've done over 350 doors here in the Arizona market. I've raised more than $15 million in private capital and a 2% default rate. That's a big question people ask, you know, how do you have such a low default rate? Well, that's called underwriting, people. In layman's terms, in banking, that's called underwriting. So we're creating the bank here today with mobilemailboxmoney.com, Win Mobile Homes, and this is brought to you by Silvercrest Opportunity Fund. Invest today with Silvercrest and start earning your interest in as little as a 30-day program. Peace.